Marc, could you give me a little bit of the rationale for why you feel like there's a need for community-based catastrophe insurance?
Absolutely. Thanks, Jim, and thanks for having me here. It's a pleasure to be here with you.
Great to have you.
So the reason that we're interested in community-based catastrophe insurance, CBCI is the short form of it. It's a little bit of a mouthful otherwise. Is really in response to the wildfire risk out west, especially in California. We've seen insurance companies exit these high-risk markets. We've seen significant premium increases, and we've seen a lot of uncertainty about protecting homes against this wildfire risk. People aren't really sure what to do. They want to know, if I mitigate my home against wildfire, if I protect my home, do I get a premium discount? That's not really very clear to them. And so the idea of community-based catastrophe insurance is where the community itself bands together and creates a risk pool. And instead of everybody in that community insuring their fire risk with some insurance company in the area, everybody is pooling their fire insurance money together, taking that fire insurance off of their regular homeowner's policy, and now everybody is banded together to protect their homes financially against that risk. Jointly, this community risk pool can then say to the residents, look, you can only participate in this risk pool if you've done this and this and this to protect your home against wildfire. So we think that this is an innovation that can do two things. One, it can help solve this supply problem that we're seeing in these high-risk areas, and two, get the community all working in the same direction to protect their homes against the risk. When you think about something like wildfire, it spreads. It's like a disease, right? So if you protect your home against wildfire, you can do all the protections you want, but if your neighbors aren't protecting their home, it really isn't going to make a huge difference, right, if there's a huge wildfire that comes through. So what we have is a collective action problem. Everybody in those communities needs to be working towards protecting their individual homes against this risk, which will also go and help the community protect itself as a whole.
So how do you go about researching this? What would be your methodology?
So this is a big, ambitious research project. This is not something that has been done anywhere else before. It's an innovation that sort of exists in concept only. There's been one CBCI that was sort of at a decently large scale. That was for flood risk for an underserved community in New York. It was piloted by a nonprofit, and to a large extent, it was successful. But this is an area where we sort of understand the idea of it, but in order to really do research on this, we've got to pilot it with communities who are willing to jump in with both feet and say, look, and understand that they face this significant risk, that their residents are having significant challenges either getting insurance at all or being able to afford the insurance that's available to them. And they say, look, this is enough. We've got to do something about the risk that we're facing. And that's where I want to interact with them, interact with the regulator in their state and say, let's find a way to make this happen, to take some steps towards mitigating that community at both the individual homeowner level and also having that community do a full assessment to say, okay, what can we do to prevent fires from coming into this community? Can we do some modeling and figure, okay, a fire is most likely to come from this direction. Why don't we zone that for a parking lot, right, or a golf course, or some maintained area that's going to stop the fire or at least slow it from coming into the community to give firefighters time to really protect that community in a bigger way.
Yeah, I think that's one of the challenges, isn't it? Is having the space around the homes to have a fire break.
Absolutely.
For these wildfires. Yeah, that's interesting. Well, it sounds very promising. Are there any examples of communities that have tried this yet, or is this still in kind of the theoretical construct phase?
So there have been a few homeowners associations, largely in new neighborhoods, where they're in the middle of building and they can go ahead and build to a higher standard in terms of fire protection. So they're piloting in relatively small ways. In that case, there was a pilot in New York that was intended to protect against flood insurance. That one was a little bit tricky because the laws are not in place to allow this at any sort of great scale. So they actually had to call it, I believe they had to call it a hedge against flood risk as opposed to an insurance product because the legislation wasn't on the books to allow something like this.
Yeah, now that you mention it, it seems like there are other natural catastrophe perils that this would, apply to. I think of flood or hurricanes or, something like that for these communities that are vulnerable.
Absolutely. The reason that I want to focus on wildfire is because, one, we've got a major supply problem with insurance companies pulling out. We don't really have that with flood insurance because we've got the National Flood Insurance Program. There's a necessity for community level action, right? We need to stop the disease spreading from our neighbors and to our neighbors. So individual level mitigation is really, really important here, not only to protect yourself, but to protect the people around you. When it comes to something like windstorm, it's really the windstorm that's causing the damage, right? It's not your neighbor's house that's causing the damage. So I think that wildfire is really important to focus on for this level of CBCI. One, because of the supply problem, and two, because of the effectiveness of mitigation in slowing or stopping a wildfire from going through a high-risk community.
And what is the role of the private market in this?
Yeah, so I think that there are a few different challenges for private insurers. One is just the risk level right now and the bounds that they're hitting when it comes to raising rates, not only on the regulatory side, but also on consumers' ability to pay these high rates. The other thing is, I think a lot of private insurance companies would love to give a huge incentive for their policyholder to mitigate, but they're operating on a one-year policy. So they may, they'd love to even provide some money to a homeowner to protect that home and to lower the risk of the policy of the home that they're insuring. But next year, that homeowner may go to a competitor and that competitor gets all of the benefit of the risk reduction, right? So if we do this at the community level, we can have this self-sustaining model and this virtuous cycle of better mitigation, lower premiums, more money into the CBCI, which then can be distributed to the policyholders in the community in terms of a dividend, or it could be reinvested in community level mitigation and other things that would be beneficial to the community. And that's something that can be really challenging for private insurers to do.
What would you say is kind of the interest that financial regulators might have in this topic?
So I think financial regulators should be excited about this, but they should also have a close eye on making sure that their consumers are protected.
So if people want to find out more about this, Mark, where can they go? Are there your organization or other organizations that they can find out more information about this kind of thing?
So my role at this point has been trying to establish these partnerships. We haven't gotten to the point where we're publishing anything. Carolyn Kuski at the Environmental Defense Fund, EDF, published a really compelling discussion of different types of CBCI. I'm only talking about one of the 5 different CBCI structures that she outlined. So I think that it's a really good. It's very easy to find online, but it's a really good discussion about what CBCI is, what forms it might take, some of the advantages and disadvantages of each of the forms. So that's a good primer for CBCI. And then when it comes to wildfire mitigation, the IBHS Wildfire Prepared program is a really outstanding program. It can have significant impacts on the likelihood and severity of fires in a community. So Wildfire Prepared program, I think it's wildfireprepared.org. And I've had some really compelling discussions with them about piloting this at scale in these pilot communities in a way that's widely deployable and inexpensive. Milliman has a great report following the Paradise, California fires about exactly how effective that program could be. And they go through a bunch of different simulations about what would have happened to this community if a certain number of people in this community had fully embraced the wildfire prepared model. And it's really amazing how much less the damage would have been if there had been widespread mitigation that didn't exist really at the time, but now we have the opportunity to put that in place for future events.
Thanks for coming here and presenting at the 2025 Insurance Financial Regulators program here at Illinois State University.
Thanks, Jim. It's been a pleasure.